All right, we have more changes unfolding in the U.S. economy and the U.S. financial system. Changes that have the world's largest institutional investors beginning to reallocate their investments outside of the U.S. and into emerging market economies. But how much of their money is still invested domestically here in the US? Well, I dove into that question over the last few days after watching this clip of PBD on Joe Rogan last week. The numbers that I heard sounded extraordinarily large. Patrick Bet-David said 3 companies, BlackRock, State Street, and Vanguard, are the largest shareholders in 88% of the companies on the S&P, a ridiculously large number. Well, I have the data, I have the numbers, and let's just say the numbers really are shocking, and we're going to look at them together. But before we get started, if you're not already a subscriber of this channel, consider subscribing. It helps the channel out, and I appreciate your support. So before we look at this, I'm going to play the clip that I'm referring to. This is Patrick Bet-David on the Joe Rogan Experience. Take a listen to this.
Vanguard, BlackRock, how much have you looked at what they're doing and what their ties are?
I've looked at it.
Yeah?
Yeah.
They're pretty much running everything.
Yeah.
S&P 500, the number that 88% of the companies on S&P 500, 88% of them, the largest shareholder of those companies is either State Street, BlackRock, or Vanguard. 88% of them.
All right, so who is BlackRock, right? They are the world's largest asset manager with now over $8 trillion under management. Trillion with a T, folks, a ridiculous amount of money, hard to even comprehend how much money that is. In comparison, the U.S. government collected only $4.8 trillion in tax revenue last year. So $8.5 trillion versus $4.8 trillion. Yeah. How about this one, though? BlackRock, not even Vanguard or State Street, only BlackRock has more money under management than the GDP of every individual country in the world, with the exception of the US and China. Even Japan, folks, only has an annual GDP of $4.9 trillion. BlackRock has over $8 trillion in assets under management. So with all that money, all those dollars, they need to put it somewhere. And this is where the creepy part enters the equation. Before we look at the actual numbers, let's just understand what Patrick means when he says that they control. I've heard a lot of people jump on that comment. But here's the thing, when it comes to the public markets, really when it comes to business in general, but to simplify it, let's just take the public markets, all right? With public companies that you could buy and sell on the exchanges, if you own more than 5% of a company, you have what's referred to as a controlling interest in said company. Now, who does that? Normally big money funds who want to have more of a say than a normal shareholder or corporate raiders. Normally this is the first step in a corporate takeover. You would buy 5% of all outstanding shares in order to push for a board seat. But even if you don't have a seat on the board, you still have influence at that company. It's likely you can get their CEO on the phone whenever you want or get into a meeting with the executive team whenever you want. You could drive change. Now, what Patrick said on Rogan was 100% accurate. Between BlackRock, Vanguard, and State Street, they together hold over 5% ownership in over 88% of every company listed on the S&P. Like I said a minute ago, this gives them influence at those companies. We're talking about giant businesses here. Apple, Microsoft, Google, Amazon, Facebook, etc. They can push to have a board seat, which they already do on many of them. So anyone who says these big three don't have a massive amount of control in the financial world is just naive. And I'll give you an example of how they wield that control later in the video. All right, so here's the data. Here's the numbers showing each of the companies on the S&P listed from left to right who is the largest shareholder at said company. We can go down the list, folks. We're talking massive companies here. I have the table ordered by market cap, which means how much the company is currently valued at. If you wanted to buy all the shares of Apple, for instance, it would cost you $2.6 trillion. Now, this data was curated last year, as the only way to obtain it is to sift through each of their financial disclosures, so it's a time-consuming process to do this. This website put some time into doing it. It's called BlackRock Vanguard Watch. Well, guess what, folks? The number one largest investor in Apple is Vanguard. They own 8% of the company, which means for just that one investment, They spent $200 billion, all right? BlackRock a close second, owning 6.2% of all Apple shares. You can see Vanguard has even more control than BlackRock does. Look at this. Take a look at Bank of America, the only company on the largest of the names here that Warren Buffett's Berkshire owns more of. But who's the second largest investor? Vanguard. Folks, this is crazy. Look as I scroll down the list here. Company after company, stock after stock, every single one of these three names hold either the largest or the second largest controlling positions in. You can't escape it. How about a healthcare company? Let's search for Pfizer. Holy moly, Pfizer has a market cap of $261 billion as of last year. Largest investor, Vanguard, who owns 8% of the company. BlackRock is the second largest investor with 7.2% of the company, and State Street with 5%. That means that these three companies combined own 20% of Pfizer. This is the definition of control, folks. You don't own 8%, 15%, 20% of a company and not wield any power and influence. You basically have carte blanche at that company. You probably have your own office and key to the executive suite. Now, I've heard some people ask, why does this even matter? Who cares? Well, here's why it matters. A real world example, an example that's alive and well today and directly caused by this ESG, environmental social governance. This is the brainchild of Larry Fink, BlackRock CEO, the arbitrary scoring system for how equitable a company is, a way to gauge and publicly display if your business is practicing what they call stakeholder capitalism, which is the opposite of traditional capitalism, or at least American branded capitalism. But stakeholder capitalism, for all intents and purposes, is comparable to China's version of capitalism, where your business shouldn't put its fiduciary duty and responsibility above the larger idealism. In China, that's the state. In the WEF's stakeholder capitalism, it's whatever's on their agenda is what it seems like. So, for years it's been equity, where equity comes before meritocracy, that kind of thing. But to hear it explained, though, here's my company's top competitor discussing this. Mark Benioff from Salesforce, who, by the way, is on the board of trustees at the WEF, the World Economic Forum, an organization with deep ties to BlackRock. Take a listen to this.
We need a new capitalism. We need a capitalism that's more fair, more equitable, more sustainable capitalism. Capitalism that values not just all shareholders, but also all stakeholders. And if we can put those things together, I think it can be a new capitalism and be very exciting for everybody.
Now, the crazy part of this story is that all of these characters are connected. For example, here's the leadership team of the WEF. This is straight from their website. We have Big Daddy Klaus Schwab up top, founder and executive chairman. Then we have the board of trustees underneath. What do you know? Who do we have here, folks? Mark Benioff, CEO of Salesforce, Lawrence D. Fink, or Larry Fink, the CEO of BlackRock. We can keep going down the list. They have the director of the WTO here, the World Trade Organization. They also have David Rubenstein, basically the who's who of political and financial elite. Now together, BlackRock, the WEF, Bank of America were able to successfully roll out ESG into the mainstream. It's so intertwined at this point in our financial system, be very hard to roll it back. Here's Kevin O'Leary explaining just how much power they really do have. Take a listen to this.
For good or bad, whether you agree with it or you don't, that ESG really, really matters. And companies that don't abide by a greener future are being punished very harshly in the stock market. And I'll give you a good example. Prior to the ESG mandate put forward by BlackRock, Larry Fink at BlackRock came out with a letter 36 months ago saying, we're the largest money manager on earth, and I want to go green. And companies that don't agree with me, well, they're not going to be part of our mandate. That was a hell of a message. People thought he was kidding. Well, he wasn't. Then the SEC just 3 months ago put out a memo saying that they decided that maybe they should audit carbon emissions.
Now, a few weeks ago, Larry Fink did say that BlackRock's going to be scaling back ESG in the future because it's gotten a bad reputation, much to the thanks of Elon Musk and others, which, to be honest, is not necessarily a good thing because at least at the moment we know what they're doing, right? It's all out in the open. Don't think that when they scale it back, it's just going to be over. It'll just probably have a new name, a name nobody even knows, operating under the table in the shadows. Alright, if you enjoyed this video, got something out of it, press the like button. If you didn't, that's alright too. Press the dislike button. Either way, I appreciate you watching.